This is a profile worksheet of the Portfolio Impact Analysis tool. There are 4 profile worksheets in total in the tool, which I'm pointing to at the bottom, 1 per business line. Consumer banking, business banking, corporate banking, and investment banking are the 4 business lines currently covered by the tool. We are at the moment looking at the profile worksheet for the business banking business line. And what this profile corresponds to is the 3rd step in the methodology's first phase. That first phase being impact identification, where we are seeking to understand which impact areas are associated most prominently with your different business lines. The profiles are basically an overview of these different impact areas and the extent to which they associate with your portfolio, in this case, the business banking portfolio. They draw on the information that you have provided in the previous 2 steps, i.e. the cartography, which explains the different components of your portfolio in terms of clients and in terms of geography and proportion of business, as well as the country needs review. Based on these initial pieces of information, the profiles are generated automatically by the tool. These are gray worksheets. All gray worksheets are output worksheets where you do not take any action inside the worksheet. This is information that is generated for you. Within that, you will find 2 segments. The first segment gives you a global view. Should you be involved in several countries, this provides a summary of all the countries together. This is followed by a section that functions country by country, starting here, line 79. In this particular case, we have an example with Australia. For each country, you will see a number of things. First of all, you will be seeing the impact associations in summary view, followed by a more detailed view on the side in a tabular form. Let me pause on these first. The summary view is a spider chart showing all of the impact areas, so the same 22 impact areas that we referenced in the country needs assessment. And for each of these 22 impact areas, you are seeing the portion of the business banking portfolio that is associated with the said impact area. You are able to see both positive and negative associations. The blue line represents positive associations. The red line represents the negative associations. You may well have both positive and negative associations for a same impact area, in that a given sector or activity may well have both positive and negative impacts potentially in the same impact area. The detailed view enables you to see which activities, which sectors triggered which associations in this spider chart. Here, you're basically seeing the list of sectors and activities that were chosen or selected in the cartography segment. The respective proportion of the portfolio that you indicated to be attached to this sector. And then you are seeing where the positive and negative associations are. Running horizontally here on line 83 are the different impact areas. And wherever you see a figure, you can see that there is an impact association. Again, positive and negative are considered separately. So you have for each sector a first line showing you positive associations and a second line showing you negative associations. The figure that sits under these different impact areas is simply a reflection of the figure you have here, i.e. the proportion of business that is in this sector. Please note that some figures are bolded, others are not. This has a meaning. Bolded figures indicate that the sector here is a key sector for the impact area. Should the figure not be bolded, the sector is not considered a key sector for the impact area that's under consideration. So in this example, agriculture, forestry, not considered a key sector when it comes to the impact area of housing, but considered definitely a key sector when it comes to the question of availability of water. This is the first part of what you see for each country, where, as you can see, what has been used is the information on sectors and the amount of business corresponding to each sector. In the following segments, you will see that the information that you have captured in terms of the countries in which these activities are taking place, and then the country needs assessment is also pulled through. In this section, you are seeing a ranking of the impact areas as a proportion of bank portfolios associated with key sectors and relative to country needs. What this means is that you are getting a listing and a ranking here of the impact areas to which your portfolio is associated from in the order that reflects basically the highest proportion of portfolio to the lowest level of portfolio, lowest proportion of portfolio. So this is dictating the order in which these impact areas arise. So here we are seeing that in terms of positive associations, health and sanitation comes top in terms of the portion of the portfolio that is associated or where there are potential positive impacts for health and sanitation. Alongside this, you will see the level of country need for this particular country and for this particular impact area, with 1 being the lowest level of need and 4 being the highest. You will notice that some impact areas are bolded and colored. Those are the ones that fall under the category of a high or very high level of need, so that they stand out immediately and are more visible. The same has been done separately for negative impacts. So you can see which impact areas have negatively associated to which portion of the portfolio, again with the largest portfolio share coming tops, and with bolding happening every time there is a high or very high level of impact. It's important to specify that the sectors that have been taken into account to produce this ranking are exclusively the sectors which are considered key for the impact areas. So this is starting to funnel down and to filter, as it were, so that you can understand where your most significant impact areas are. You will recall in this table that some figures were bolded and others were not. The bold was for key sectors, So the figures that have been retained for this ranking are only those in bold. On the side, you see that the ranking is reproduced. The only difference is that instead of ranking according to the portfolio amount, we are ranking based, first of all, on the level of country needs. So all the very high levels of country need come first, all the way down to the lowest, and the percentage of associated portfolio come on the side, with bolding happening everywhere where indeed there is activity inside the portfolio that is related. The idea behind these visualizations is that they assist you in understanding where your significant impact areas lie. The idea being that an impact area is significant if it is associated with a large part of your portfolio and if it is also coinciding with a very high level of need in the countries of operation. As said, these country-by-country needs are complemented by a global view. In the global view, you likewise have a spider chart that provides a summary and a detailed view. There are a few differences, however, between the global view and the country-by-country view. As regards the summary view of this global perspective, you will notice that in addition to the positive and negative associations, which have basically been weighted by country based on the relative weight of each country inside of your portfolio as provided in the cartography section. So in addition to this, you're seeing a tracking of any LDC presence and also any portion of the business that is associated with SMEs. The reason for this is that there are specific impact associations that are taken into account linked to these. We see three drivers of impact. One is sector, i.e. the type of client in terms of the sector. Another is the actual location, and another is the type of client in and of itself. So SMEs will intrinsically carry some positive impact associations linked to healthy economies and economic convergence, and presence in LDCs likewise will carry a positive impact association vis-a-vis economic convergence. On the side here, the detailed view shows, of course, not the sectors, since these vary by country, but they show you the countries one by one. When it comes to the rankings, these are now limited to a ranking per portfolio proportion. The country needs are not shown here as they are in the country-by-country visualizations, for the simple reason that, of course, the level of need for these impact areas is different from one country to the next. With this information, as said, the idea is that you are able to identify your most significant impact areas. This is something that you would then capture manually on this next worksheet titled Most Significant Impact Areas. In this worksheet, you can see a summary for each of the business lines: consumer, business, corporate, and investment banking further down the line. And for each one, you also see the global and the country levels reflected, roll vertically. And finally, within each of those, you have both the positive and the negative associations. At this stage, you are manually concluding, based on the information that was found in the profiles, which impact areas are the most significant. These can be selected from the drop-down list of the 22 impact areas, and basis provided here to explain the reasoning behind this selection. As said, there is a possibility to do that both on the global and on the country level. If we look, for instance, at an example, here we can see under consumer banking, inclusive and healthy economies is one of the most significant impact areas, and the justification has been included here regarding the fact that this is a core positive impact of consumer banking by virtue of its very nature. There are other examples. If we go into business banking, we can see, for instance, waste coming up in this particular example as a most significant impact areas, and an explanation here indicating that practically all the sectors supported by the bank's business banking activities, including key sectors such as agriculture, manufacturing and construction, are concerned or are affected or associated with this impact area. And in addition, waste has also been identified as an impact area that has a very high level of need in this particular country. A mention is also made of the fact that there are interlinkages with other impact areas, such as water and soil quality. This, as you can see, this starts to show us the interlinkages between the different SDGs. A final word on this part of the process in terms of how these impact associations are generated. We've already mentioned that they're drawn from the cartography and the impact needs within the countries, so the country needs assessment framework. There is, of course, one further place that this draws from, and that is the inbuilt mappings that are in this tool. Let me turn in particular to the sector to impact map. The sector to impact map takes all of the industry and sectors and activities that are reflected in the ISIC code that we use in this tool. This runs vertically, and it sets them against the 22 impact areas which show horizontally. For every one of these sectors or activities, all the way down to the most granular level of ISIC, so level 4 of ISIC, the positive and the negative associations are tracked. The rationale here is that this is not a binary choice between whether a given sector or activity has a positive or negative association with an impact area. It is rather to say, are there any positive associations between an impact area and a sector? And also, are there any potential negative associations? Hence, every single sector and every single activity showing twice, so that both the positive and negative associations. Where there is an association between an impact area and a sector, so here we can take the example of growing rice, part of the agriculture sector. You can see, for instance, that there are a number of cases where there is no number and situations where you do have a number. Everywhere where there is a number, this means that an association exists. Sometimes the number is a 2, sometimes the number is a 1. In this case, for the positive associations, we see there is a 2. This means that there is a consideration that this is a key sector for the impact area under consideration. In this case, we have the impact area of health, and rice being a staple food, this is considered a key part of health, as is the rest of, or a large part of the agricultural components. Where the number is a 1, this means there's an association, but that the sector or activity is not key to the impact area. There is also a very short explanation by the side of each association. As regards the key sectors and why certain sectors are considered key, this is further explained here in the key sectors map. The key sectors map will enable you to see for each impact area which are the sectors that one can consider key, either from a positive perspective, which means that the sector is indispensable for a particular impact area to be realized, or from a negative perspective, which means that the sector is one of the main sectors undermining an impact area. A typical example could be under, for instance, the food impact area. Naturally, agriculture will feature as a key sector from the positive perspective. If we look at a negative example, you will find that agriculture, transport, and energy will show key sectors as regards climate change. In each case, what you see in addition to the sectors that are considered key, you will also see a number of references so that you can see on which scientific grounding we have based this identification of key sectors, as well as a narrative illustration of why a given sector is key for a given impact area. With this, we arrive at the end of the first phase of the tool methodology, which is impact identification. This is indeed the very last worksheet that pertains to this phase. And at this point, as you can see, profiles that are built up and the listing of most significant impact areas is based exclusively on the intrinsic nature of the business lines, the clients, the sectors, and the geographies that are present in the bank's activities. We are not yet considering the actual performance that is resulting from the bank's activities. We are speaking merely of potential positive and potential negative impacts. The objective of the next phase will be precisely to move into a performance assessment.